From the figures reported, debt refinancing will take the largest share of the budget, that is 8.5 trillion shillings, followed by security at a whopping 7.7 trillion shillings. Human capital development will take 6.8 trillion shillings. The works and transport sector will take 3.9 trillion shillings, and 1.4 trillion shillings will be allocated to agro-industrialization, while regional development will be provided 1.2 trillion shillings. The Ministry of Finance indicates that out of the 41.2 trillion shillings, 22 trillion is expected to be raised through local domestic taxation measures. Some of these measures have also been presented and are for scrutiny by the relevant committees. They include the Income Tax Amendment Bill, which proposes that landlords earning rental income from more than one rental property account for that income and expenses on each of the properties separately. That's one of the provisions that has caused quite a bit of conversation. Another is in the Traffic and Road Safety Amendment Bill 2021, which proposes that effective 1st July 2021, a person owning a motor vehicle, trailer or engineering plant will pay an annual levy of 200,000 shillings and a 12% tax on internet bundles, this coming in to replace the OTT tax. A tax of 70,000 shillings per kilogram of exported fish more is also proposed, among others. Stakeholders who follow closely budget issues have been reacting to these matters, and some of them think that the government can raise some of these resources if it takes steps to deal with illicit financial flows and also ensure better utilization of revenues so far realized from the oil and gas sector. This evening we continue looking at the different views on the national budget as Parliament begins discussing its details and also receiving views from stakeholders. To begin this discussion with us, we have our guests. We have Ms. Regina Navuga. She's the program officer, SEATINI. Regina, good evening. Regina, can you hear me?
Yes, I can.
Excellent. Let's hear your, quick thoughts on the budget proposals made to Parliament.
Okay. Thank you very much, and good evening to all the listeners. We are well aware that financial year 2021-22, the first year of implementing the program-based budgeting, we are looking more at the results vis-a-vis the earlier position where it was more focused on the output. So government, of course, believes that with merging some of the sectors, including, I can give an example, education and health, that have been merged in capital development. Of course, for them, the long-term goal is to see that this is just a holistic planning, and we tend to, of course, eliminate everyone being in their corner budgeting in isolation, which is a good move. But of course, going forward, we need to see that with work that this is implemented accordingly, and we eliminate any redundancy. But of course, we also note that this financial year, we mark the second year of implementing the third National Development Plan, whose goal measuring is to increase household income, improving the quality of life in Uganda. So one of the issues that we need to look at as the citizens of Uganda, civil society organizations, and all the interested parties is whether our budget for this financial year aligns very well with the NDC goal, ideally. And what we know that, of course, this year we've the budget is about, there is a projection of a decrease of 9%. That's about 4.27 billion, of course, from 45. Of course, I saw in the papers today, there was a debate with what Honorable Mathias Kasaija passed the budget of 45.6 vis-a-vis the one of 41.2 that he presented.
Right.
And yes, and some of the key issues that we are raising, that we don't have the money, we don't have the revenue. We need to look, we live within our means. And I just wish that we could holistically live and implement some of these measures that we want to see, that you have your revenue with the expenditure and then go forward. But of course, that is subject to debate.
All right.
We've analyzed some of the sectors, like of course the trade sector, and we see that it's well aligned, but of course there are some things that need to be addressed, like of course the support to the SMEs and their access to, of course, the credit facilities. Of course, we know that UDB, there's been a big debate in the country on how we should be capitalized, what are the challenges, and how we can support micro, small and enterprises, MSMEs, going forward. And for us, our advocacy is largely to see that we raise more revenue in a fair and sustainable way so that we can meet our expenditure. There's a big debate around the debate question, borrowing internally, externally, what are the implications to the future generations and right now, but also to service delivery. So that's some of the issues that we can highlight and debate going forward.
All right.
With tax measures, we've taken, maybe just to give you a little background, civil society organizations usually present our tax, we always present our tax proposals to the Ministry of Finance last year. And some of them were taken on board, like Mr. Andrew alluded to. But of course, there are some contentious ones that keep coming up every now and then. Like, of course, the debate on tax incentives that have been highlighted in the tax proposals. And if they are to pass, for us, we are saying that where is the spirit of the domestic revenue mobilization strategy, which looks at eliminating and having a clear strategy guideline before tax incentives are being awarded. Because the bigger debate is, if you give a tax incentive to one sector, to one individual in the sector, you're creating an unfair ground to another individual in the same sector. And over time, we see that some individuals or companies are engaging in aggressive tax avoidance. These are some of the things that we have to look at. And some of the other proposals that we welcomed, of course, the automatic exchange of information, where different countries are able to know or analyze what the different companies, especially the multinational companies, the revenues they're reporting on in the different countries, how much they are making, what are the costs, what are the losses, then we are able to compare over time. However, one of the challenges is that the Commissioner General in Uganda is not permitted or is not allowed by law to share some of the information like from banks, which would be helpful for him or her to go ahead with implementing such a measure.
All right. Well, enter the oil and gas sector. A lot of attention has now gone in that direction to finance this 41.2 trillion budget, and we're not saying it may not increase, but Mr. Muhindo, how exactly can that oil and gas sector come in to support this budget?
Thank you very much. The oil and gas sector has already, for the last 4 or 5 years, been contributing to the budget because there are monies that have been coming through signature bonuses and other taxes, capital gains tax, that have been imposed on the transactions or the activities of the oil and gas sector. So it's not going to be new that after oil production, that's when we'll see budget support. And in fact, even of these 41.2 trillion shillings in the budget for 2021-2022, there's over 200 billion that is expected to come from the petroleum fund. So the oil and gas sector has the potential, first, as shared by Andrew, to reduce the burden that taxpayers are having to bear it's clear that government is taking all the necessary measures to see to it that every area that can be taxed is taxed, and as many individuals that can be taxed are also taxed. That is expanding the tax base and also coming up with measures and initiatives to reduce the possibility of tax avoidance or tax evasion. So with oil revenue, I believe starting with the heavy investment that our oil companies will be making once the final investment decision is made, which is expected to be in excess of $10 billion US. If a fair tax on the 10 billion the foreign direct investments, $10 billion US, not even shillings, a fair taxation on that can help to boost the economy in itself. And that's why even from the projections by the Ministry and Bank of Uganda, it's said that the signing of agreements on 11th April by the governments of Uganda and Tanzania already showed optimism in the economy. So the oil and gas sector has the potential to do that, to increase revenue, first through the investment that the companies will bring in, but secondly, through actual profits when production begins.
All right. Regina, there are proposals around borrowing internally. James has left off on the issue of, the debt and debt refinancing. There are proposals to borrow internally. How can this be done in a way that it will not, negatively affect the economy and, the ordinary business person?
Okay. Maybe before I answer to that, I wanted to add to what James was talking about. Government needs to address some of the challenges that we are facing right now. And one of the key issues we've seen over time is we tend to attract investors with assumption that they will not come to Uganda to invest. We need to understand that before an investor puts money anywhere, they've done their calculations ideally. What is the rate of return on their investment? They know. And what Uganda needs to do is so that they reduce some of the incentives that they give them. In case they give them maybe an incentive, should be taxed ideally. And we are negotiating some of the laws or the treaties, like the direct association agreements over time. We tend to reduce our taxing rates. So in Africa, we usually we always impose withholding taxes, but you find that a company will come and negotiate to pay only 5% withholding tax or a zero rate on withholding tax, and we are losing out in the long run. We should be able to get revenue that we can, like the signature bonuses, like James talked about, without ideally looking at corporate income tax, because we know that internally they do a lot of trading, and it's not until the government comes up with a monitoring mechanism to audit the books of these multinational companies, well knowing that they have the skills, they have the expertise, and we might think that we are getting revenue in the long run, yet we are going to lose out. Right. And back to the question, of course, on debt, we do note that is a contentious issue. Government, of course, competing with the private sector. Of course, and the individuals, ideally. And for this financial year, we, of course, noted the increasing debt, domestic borrowing by government, which currently stands at $4.73 billion US, which is worrying. So where do we leave the MSMEs? They cannot access the loans, of course, given the impact of COVID going forward. And this, of course, has challenges going forward. They cannot employ people, your cousins or our relatives that will be laid off in the long run. We also note that borrowing is not bad, but government should borrow responsibly And for us, our discussion is now even broader. We are also putting to task the people who are giving these loans, like the banks, even the multinational, even the IMF and the World Bank. Before government comes to borrow from the banks, they should see to it that we are meeting minimum conditions.
All right.
Yeah, ideally.
All right, thank you.